Most traders lose money. In fact, 90% of traders lose 90% of their money in 90 days. And I know what it's like, boys. I've been there. I'm still progressing. But the truth is, it isn't just about your strategy. And if you're here and you think trading is a get-rich-quick scheme, then this video is going to open your eyes to the reality of what it's really like. By the end of this video, I'm going to tell you how not to be part of that 90% group and the mistakes people make and which lead them to be part of that losing 90% group. I also want to say, by no means do I think I'm some guru or someone that knows exactly what they're doing. I'm still progressing. I'm still documenting everything on this channel. Made some good progress this year. First 3 months profitable this year. So I'm starting to gain a small amount of consistency, which is why I feel this video I can help people that may be a bit behind. You can also learn from the mistakes that I made over the last few years, the things I did wrong, the things I would change. So firstly, most people come into the markets with the mentality, the wrong mentality, and the mentality of this get rich quick. I know that I saw these things growing up. That's what made me want to get into trading. I saw these Instagram lifestyle, or these young people that turned the penny stocks. I think it was penny stocks back then, because now it's all crypto and meme coins. But when I was starting, it was penny stocks, and seeing people turn $1,000 into 100,000 in a year. And again, it sparked my interest. But that mentality is what ruins people, because they over-risk, they make poor decisions, and they think it's going to be easier than what it is. They think they can just be part of that lucky group that starts making loads of money. So the mindset needs to change, and you need to understand that this is a professional skill. It's something that takes years to learn. The professionals take, a lot of my friends went to university, got apprenticeships, and I decided to try to view this as some kind of profession, some kind of job, and some kind of career, because it is. If you're going to make a lot of money from this industry, it's going to take you a lot of time to master it and learn. And if anyone, let's face it, if we could all make money so quick from our bedrooms doing this or from our office, then no one would work and no one would do the bad job that they don't like. So you have to have the right mentality, and I definitely had to switch this and understand that, okay, I need to view this more long-term approach. I need to view this as a career, and that career could take me 4, 5, 6 years. If you go to university, it takes you 3 years of studying to get the degree. So I have to look at it from the long-term perspective. Also, major thing that people do, and the reason why they fail and are part of that 90% that lose money, is purely down to risk management. Now, I never blew an account, my own personal account. I started with £500 because I luckily learned risk management early on. I only risked 1% of my account per trade, which was massive, because if I didn't know about risk management and I didn't really know to do it, I could have risked 10, 20, 30% per trade, probably 10%. And if I take 3, 4, 5 losses in a row, you've lost half your account. But because I knew to risk 1%, which I advise you guys to do, I mean, it varies, but 1%, let's face it, if you risk 1% and you take 5 losses, you're only down 5%, as opposed to risking 10% per trade. If you lose 5 in a row, you're down 50%. That's half your account gone. So you need to have capital to trade another day. If you lose all your capital, you're gone. You need to make sure you've got enough capital to trade another day, and focus on not how much you can win, but how much you can afford to lose, because everyone looks at the end, the profit target. On this trade, I could have made X amount of money. You need to look at what you can afford to lose, and usually with whatever size capital you have, 1% is a good place to start. Emotional trading and lack of discipline also holds people back. It held me back a lot. I wasn't disciplined for a while. And as humans, we are emotional. So naturally, you have emotional times in your life, or you have emotional times inside of trading. If you took a few losses in a row, 4 or 5 losses in a row, it can play. You can have the emotion of fear. You can be fearful. That's what I was. I was risk adverse. So I struggled to execute positions. So what would happen is I'd take 3 losses in a row, 4 losses in a row, and then I'd be talking myself out of good quality trades because I was fearful to lose any more money. And for me, that held me back, because at the end of the month, I wouldn't take the winning side of the edge because I was so risk adverse, because I didn't want to lose any more. But I know people in the community that I was in, and friends, well, not friends, but acquaintances that I knew that trade, that were more risky. So they were the opposite. They were more risky, and they would tend to, if they took 3, 4 losses in a row, they would tend to up their risk to 3, 4%. As I just mentioned, 1% is the best risk management to have to save your capital, but they would up the risk to 4, 5, 6% per trade to try and get those losses back. And if they lost, they would end up blowing their account or losing a lot more. So you have to identify which side of the spectrum you're on. I was more risk adverse, and I've had to overcome that, and other people are more risky and they have to overcome that. And that is something inbuilt from your background and from where you're from. Usually if you have people in your life that are more risky people, you tend to pick up those traits, especially as a young person. I tend to pick up more of a risk adverse approach, especially towards money and trading. So that's something I had to overcome. But not being disciplined and not being able to execute your plan profitably because you're scared of well, not scared of losing, but you're uncertain about the outcome, that can affect your trading massively, because if you're not disciplined and you can't execute your plan in a disciplined manner, then you're going to take trades that aren't part of your plan, which mean you don't have an edge, which means you're gambling. And in turn, that means you're going to literally be risking money on a gamble. It's like going to the casino. The way you have consistent results is sticking to a plan that you know works, that has long-term positive expectancy. You have data and an edge to suggest that you have long-term expectancy, positive expectancy, and sticking with that plan throughout the wins, the losses, and executing it like a robot. Like you can feel the emotions but not react to the emotions. And that's something that I had to overcome as well, focusing on, you can feel the emotion, you're not a psychopath, you can't just not feel emotion, but it's how you deal with it and not reacting to it and understanding that. And that's where discipline comes in, because you might feel a certain way, but you know what you've got to do, and discipline overrides that. So discipline, emotional trading can have a massively negative impact on a lot of traders, and that's why they fail, and that's why they fall into that 90% of traders that lose over the long term. When you have a plan, when you have a strategy, when you've learned the strategy, you know you have an edge and you back tested it, you've done the work and you've got the data to know that you have positive expectancy, and that people around you that are trading that same style have been profitable, have either passed funded accounts, got payouts, or making consistent profit. The most important thing to do is, if you take losses, which will occur, you can't avoid them in trading. When you take a sequence of losses, a series of losing period, and you're in drawdown, is not to strategy swap, because again, that's what I did a lot early on in my trading, because I would end up taking a few losses and wanted to work out why. I wasn't understanding that that is part of probability, and that these trades were good even though they lost, because they were part of my plan. I had to focus on the process, not the outcome. The process of executing my plan, if I did that correctly, it didn't matter about the outcome. But because I was so focused on the outcome, when I took good quality trades, even when they lost and I was losing, I would look to strategy swap, the next shiny ball syndrome. Like, you're trying to look for the next best thing. You see on Instagram someone that's passed an account using this style, so I'd switch to that. And the problem was I wouldn't then allow the positive side of the edge to play out, because I would change time frame, change currency pair, change style, entry model, and the whole system gets skewed and is ruined, because you're not allowing the positive side to play out. So don't strategy swap. Allow your strategy a large sample of trades over a long period of time, and then afterwards, if it doesn't suit your circumstances, maybe you work and maybe you can't trade that certain style, or maybe that style doesn't suit you, that's okay. Then you can look to change it, but don't look to swap if you're having drawdown periods or you're losing. If you know it works and you've done the work and you know that you have an edge, you have to allow that edge to play out over time. And the only way you're going to allow that is by riding the wave of the drawdown and allowing the winners to play out. But don't swap and change strategy, because that's just going to affect, you're just going to be on this break-even cycle of starting something new, having some winners, having some losers. Inevitably, you'll have drawdown period, and then you'll end up going back to something. You need to stick with one thing that works, that you know works, and over time, allow the edge to play out. A lot of traders enter the market with no rules, no plan, no tangible rules to trade. So they're going in naive, they're going in rogue, and effectively it's gambling. Yes, you're predicting whether something's going up or down, but you need some tangible rules to suggest why you're entering. So you have a daily bias, or you have some kind of direction. Why are you thinking it's going to go in a certain direction? And then you have some kind of entry model, and you can make rules and a plan around that, because if you're going in with no rules, you can't hold yourself accountable. You can't identify what was a good trade, what was a bad trade, and you can't have a mechanical approach. Some systems are not as mechanical, and other systems are more mechanical. However, you need to have some kind of tangible rules so that you can follow it, and that you can follow the plan, and that you can identify what was a good trade, what was a bad trade. You can identify missed trades, and you can gather the statistics by logging the data, because you understand exactly mechanically why you're entering a certain position. Most people that start trading have done it for 2-3 months and stop. I know people that dabble in it and they half do it, and that's what I did when I first started. But if you take it 100% seriously and you learn from a community, whatever community, or you learn and you study and you put years into it, then you're going to make sufficient progress. The reason why the statistic's so high that 90% of traders lose 90% of their money in 90 days, or 90% of traders don't make money, is because they don't give it long enough. If you looked at the statistic of those traders that are failing or are not making money after 5, 6, 7, 8 years, I bet it would be drastically lower. It's those people that start something, aren't disciplined, aren't getting the results, are seeking short-term gratification, and aren't allowing themselves long enough time to see the progression. It's like those that start going to the gym and they expect to see results in 2-3 months and then quit. They don't get the results and they'll become part of the statistic that go to the gym and fail, as opposed to those that have been there 2-3 years later, still working hard, still not seeing any results for the first 6-7 months, or not much results, but they keep going, seeking the long-term gratification and achieving the goal. And that's the same thing with trading. So this video is to give you hope and positivity that you can become part of that. I'm still progressing to get part of that. You know, I'm been consistent this year, the first 3 months, and hopefully it continues. Hopefully you guys can support me through my Road to a Million in $1 million in Forex funding series as well, where I'm just showing all the trades, everything live, so I have a log of everything in the future, and also to help people that are on the same path as me. You know, documenting my whole journey, trying to get the 100k account. And that's what we're here to do. So if this hit home, drop a comment down below of the hardest thing you've had to face during your trading journey, the things you're still struggling with, and I'll get back to you in the comments and try and help you out. And I'm sure there's other people in this community that were built on my channel that can help each other out. I'm also documenting my journey every week, so make sure you subscribe, hit that subscribe button to follow along and follow my journey. It's going to be a very exciting time, week upon week, showing my live positions, my wins, my losses, and it's going to be exciting when we get towards the first funded account, when we first get payouts. It's going to be an exciting journey, so make sure you hit subscribe, share, like, comment, and yeah, I appreciate you guys. I appreciate the support, and I'll see you in the next video.